Hi, this is JB Cycles with an update for April the 14th. Today I'm looking at another cycle, a 15-week cycle. But first, over to some charts we have been looking at earlier. So here we have the 25-week shifted S&P, and we have just broken below it, giving us bearish signal. We have the 3.5-year cycle pointing up, but we could break down earlier than what the cycle suggests, because the general direction is down for the rest of the year. So this could be the shoulder, just where I projected it from these symmetries. Could we still have A, B, C going up? Is still possible, but I think this is a bear market. We have made the all-time high, and we have made a shoulder, and we are going down. If we break this level, we will get a declining 200 MA, which often is a definition of a bear market. We have the signal that Peter Elidis is using, and we are just about to be getting a sell signal here, projecting a low or a target down here somewhere. But of course we could break up again. I've been looking at the 1 month cycle, and we have just had the cycle low, and we are going up for the next week, but we could be in a situation where we have a doubling of cycles and going down to mid-May. In the hourly data, the last video was about here. I was expecting a bit more upside, but we didn't get that. So I've had two scenarios here, and we are right in the middle. And this is of course the Dow Jones Industrial, and the S&P looks a bit different and more bearish. So I don't have a clear setup here from my wavelets for Dow Jones. In the weekly data, I've been seeing more and more clear bearish signals. You could compare that to the daily data and the 200 MA, where we broke above with the current or previous rally, and now we have broken below again, and we could be going straight down and making new lows. So let's look at this cycle. Today's cycle, a 15-week cycle, or the 80 trading days Terry Laundry ringing cycle, and we could have some harmonics involved here, making a bigger cycle of 31 weeks. So going back to 2016, we had these vertical lines are the call it theoretical cycle lows. So the actual low was a bit early here. Here we had a double low on both sides. This was the Brexit panic for one day. Here we have also a double low on both sides. This was the election panic with Donald Trump. Here we have a cycle low. I can barely see it. Here we have a low, and here if you tilt your head to the left, you can see this as a low, but very bullish blow off phase. So here we are breaking below the 15-week shifted S&P. That's a bearish signal, as long as you are above the level from the previous cycle. You are in the clear, but once you are breaking below the level of the previous cycle, then by definition the trend is down, unless you can overcome it and break up again. So that happened here. The cycle was going up, so we had help from the cycle, and we managed to break above again. We have a price low here. Here we have a price low which broke below, and the cycle was going up, but it was struggling. Here it overcame it, but here it didn't. It crashed down, but the theoretical cycle low is here and the price low was here, so actually what we ended up with was a doubling of cycles, or some call it inversion. So we broke above here a low, early cycle low here, indicated by this blue arrow. Also an early cycle low, or a price low, early low. This came early. This was just a little bit early. Spot on, spot on, spot on, spot on. But here we have some strange price action. So it could be a doubling of cycles. Here pointing to a low around mid-May. The bullish alternative would be like we had here. So if we can't make a lower low here in May, then we could go up in the summer. But that would not fit with my cycle pointing generally down, and especially after May and into June and so on. And from what I see in my weekly data and so on, everything is supporting the case that this was the bull market high and this is a shoulder. So let's look at the harmonic. This was obviously a important low, and you see kind of a doubling of cycles here. Maybe, I don't know, maybe a little bit here, yeah, but here you really can't see it. Really can't see it there either, but here you can see it, although it came a bit early. Here you can see it, there you can see it, here too. Not that as much here, but here, yes. And if this goes on like this, we should crash down into, let's see, May, June, July, August sometime. Yeah, I don't know about this 31-week cycle, but the shorter one, 15-week cycle, I'm pretty confident in. It goes way back, at least back to 2007, but you can see some signs of it earlier too. So this cycle hasn't been dominant like forever. If we go back to the year 2007 or a bit further back, around that time we had a 25-week cycle rather dominant. And if we go back before, I think 1998, it was the 40-week cycle that was dominant. So the market is changing, and all this cycle are kind of present still, but the dominant one seems to be the 15-week at the moment. Okay, so conclusion, we could be going down into mid-May, but watch out for the 1 month cycle that is mostly pointing upwards the next week, the coming week after Easter. However, if that fails of some reason, could be some technical signals overriding the cycle or news related. So if we don't see strength the coming week, then we have no help from the cycle, and watch out for a low in mid-May. Okay, see you in the next one.